Good morning, everyone. Welcome to Admiral Markets. My name is Chris. We're going to take a look at Forex and the charts and price action in this webinar. So we focused on technical analysis. But before we do that, first of all, this PowerPoint and this disclaimer explaining that the material here is made for a global audience, is presented for a global audience. Please take into account that the info here may not be suitable for everyone. To get the corresponding information on charting, conditions, and other details, please take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, the risks involved in trading Forex exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. All right, so by continuing watching this webinar, you agree with the disclaimer and the content stated here. Good. Thank you for your attention. Today we'll be looking at Fibonacci trading. We'll be taking a look specifically at fibs. But just using fibs, of course, is not all what needs to be done. A trader must and should always have a trading plan. A trading plan indicating what to do when, what to look for, and how to trade it, right? And how to analyze the charts and what tools and indicators might be used. This is, of course, a very short trading plan. It's just kind of like a skeleton. But roughly speaking, you do want to at least look at these 5 steps before entering. It's kind of like a checklist. Most traders, or not most, but let's say traders that don't have a clear plan, when looking at the charts, see something interesting happening and then get kind of like appealed to trade it without sufficiently looking at other aspects and weighing whether that particular interesting aspect, let's say price is reaching a 50 fib, whether that's actually all that needs to be done, and then jump in the trade, but then think about the consequences later on. So what we as traders want to do is make sure that the entry is valid, the entry is according to our trading plan. If it's a valid entry and there are no filters blocking the trade, then, if it's a valid setup with no filters blocking the trade, then an entry could be done. And then it all depends on trade management and the trading psychology to plan the trade and trade the plan. With that said, let's head over to this calendar. Today we have primarily FOMC is a big event on the dollar. We do have some lighter news throughout the day. Not much in the European session though. Only trade balance pound, German 2-year bond auction, Greek industrial production, Portuguese trade balance. Let's start with the euro dollar. Let's see, we're looking specifically for fibs, so I'll reduce the number of moving averages here that we see, and I'll use probably even a different template. So we're focusing primarily on fibs. Doesn't necessarily mean, though, that we will not use moving averages at all, or trend lines, or pivot points for that matter. I do believe that it's always good to get confirmation of what we're looking for. Fibs will be, of course, the main focal point, the main focus point regarding today's webinar. But fibs are primarily useful in trending modes, or that's their main use. If there's no trending mode, then actually fibs are not handy at all. All right, because we are in a range then in that case, and the range basically support and resistance is very important, but the fibs will not provide any guidance. The market will just break through those fibs and go to the next support or resistance, and it's more choppy and therefore not useful. If you're in a trending mode, you're expecting higher highs and higher lows, or lower lows and lower highs. That's when fibs are very extremely useful, because that's when you get follow through at the fibs. All right? Follow through because price is making lower lows and lower highs, and higher lows, right? when price is making this, for instance, here, higher high, higher low, higher high, higher low, higher high, higher low. What's the rhythm here? Right? It bounces at certain fib levels. Sometimes deeper, sometimes medium, sometimes very shallow fibs, but then does continue. That's why fibs are handy for trends and not for ranges, because if price is in this chop, the levels are not going to be important and not be respected by the market. Now, in case of this euro dollar, we can see that price stopped, for instance, here at very close to the 61.8 after already stopping at the 50 fib. So that, regarding the euro dollar, could already be a bouncing spot, right? You can use fibs in various ways. You can use them as a potential, let's say, potential filter. If you look at the PowerPoint, you can use them as a filter. You can use the fibs as an opportunity when for instance, price gets back to the 61.8. If it gets there, I'm interested in this pair. You can use fibs even as a trigger, right? That's kind of the same as opportunity in a way. Or as an entry. I'm entering at the 61.8, for instance. So you have various rules. Fibs are not that useful as defining the trend. I wouldn't use fibs as, establishing whether the trend is up or down. I would rather use moving averages for that, and higher highs and higher lows, and trend channels for that. All right, that's not so useful. More specifically, I would say what I use fibs for is indeed the filters, personally. If, for instance, let's go to this weekly chart. This weekly chart is showing a fib. And if price is very close to this weekly 61.8, I would not take a long right in front of that level, right? That's a filter. The other way could also be used if, for instance, you're in an uptrend, right, and price is moving up and is going down like this. This could be a potential bouncing spot at the fib. That is interesting to actually trade, not use as a filter, right? So that is an opportunity or trigger. And when a trader actually, let's say, dives in more to an hourly chart and actually enters, that would be then an entry situation, right? Let's say, in this case, the trader would have fibbed this downside here and entered the 61, then it's actually using it for an entry. Now, often enough, fibs have confluence, depending on how many time frames you look at, basically how many fibs you put on one time frame. They usually match up. For instance, if you put a fib on this correction like that, usually speaking, the -272 target lines up with a fib retracement, or the -618 lines up with a fib retracement, or you have multiple fibs at one spot. That always gives, of course, a bit stronger level, just like using fibs with other concepts like trading trend lines, for instance, or moving averages, provide more support and more reasons why trade or price could actually bounce at a certain fib, right? So that's the advantage of using confluence with fibs. Now, with fibs, it's very important to note that you're trading the correct swing high, swing low. The danger of fibs also in trends is that if you have already several up moves like this, all right, a lot of them in this case, and you start fibbing the last move here, that eventually we could not only get a retracement of the immediate swing high, swing low, but we could see retracement of this entire swing high, swing low. And then, of course, when you fib from blue to blue and you put your stop loss below the bottom of blue, that's a loss because price breaks through it. And all these fibs prior to that worked well. All these fibs here were respected, and those trades continued for good profits. The very last one, though, doesn't. So signs of knowing that the trend is over like this are, for instance, divergence and being close to a major or one time frame higher support or resistance. Why support or resistance? Because that's where trends could end. Trends have struggled and make bigger retracements at support and resistances of 110 from higher than your trend chart. Okay, so if we're looking at a trend on the 4-hour chart, you want to look for that on the daily. Well, daily tops and bottoms are always important. So no matter what time frame you look at, those will impact the market. Okay, so those are the two main things, and that's how you can maybe avoid the loss at the very last fib. So it's very important to know what to fib at what time. Most of the time, the most natural swing high, swing low is the best. But yeah, that's not always as clear as it sounds. In this case, you know, we had a bounce at, let's say, the 61.8, just missed it, right? Eventually went to target. Fibbing the next swing high, swing low, we can see 61.8, fib, went to target. Let me just get rid of this fib for the moment. You see 618, minus 272, down, 618, went to target. All right. So this kept going until eventually here we didn't continue with the trend and we started to make a bigger retracement of this entire move up. When you see that happening, you can take off all these smaller fibs within this leg and start fibbing the entire move up, if that's still valid. And that's when you get now respect for the 61.8. Right? So smaller fibs within this up move were good. The only time, of course, it didn't work were if you would have fibbed this last move. Then eventually it broke down. Now maybe you would have avoided it by trail stopping your stop loss, then potentially the risk would have been reduced. Other traders use the following system. They look for a bottom, and they look for the first top after that, in an upside example. They only move that fib. This is basically like the first point, and this is the second point. This is the third point. Right? The first point is the bottom in an uptrend. The second point is the first top. The third point is the fib bounce, and the fourth point is the minus 618 target. Whenever that minus 618 target is hit, then they'll move the fib. Now this is very important, I would say, if you are interested in fibs. This is a very clear and concise rule. So I would advise to pay extra attention. If you then move to the next fib target, when the minus 618 is hit, not the minus 272, and the reason for that is sometimes when the price moves up, retraces to the 38.2, then bounces and hits the minus 272 target, the currency then sometimes still makes a retracement to the 50 fib before it goes up to the 61.8 fib, minus 61. Let me give you an example. Let's put just a random fib on this chart. Let me create some space here. What I mean with this is price is moving up, right? Hits a resistance, then starts to retrace. Down to the 38.2, gets a bounce, moves up to the minus 272. Price then makes a retracement back to the same fib of the 50. Then goes up to the minus 618 target. That kind of formation does happen. And if you then start to fib the green swing high, swing low, and put your stop loss below it, you just get taken out and see the see the currency then move to the minus 618 target. So if you have one of those moments like, oh, I had a great trade, but my stop loss just got taken out, maybe it was one of these cases. Right? So to avoid that, you want to wait for the minus 618 to be hit. And whenever the minus 272 is hit, like this, for instance, you don't move the fib as yet. You still keep the same fib because you're kind of planning for a deeper retracement potential. Now, that's not the same when the 786 or the 886 get hit. This scenario is valid for 23.6 to 61.8. Okay, 23.6 to 61.8. We don't move the fibs. If price retraces deeper to the 78 or 886 fib, right? Let's take a look. Up, retraces deep to there, or to there, then the main target is the minus 272. And whenever we reach that target, we can immediately move the fib from retracement to target. Remember, we're always taking it from the bottom of the new fib. We always take from the bottom, the lowest hit here, to the target, which is either minus 272 or minus 618. It's minus 272 for these fibs. It's minus 618 for these. Now, not necessarily will we move the fib immediately upon the hit of the minus 618. We're looking for the next top in an uptrend. So here, for instance, price is pushing through the minus 618. It only stops when it hits the minus 1272. So how do we move the fib? We double click on this, we drag it to the new top, drag it to the new bottom, and this is the new fib. Now this is extremely important because this is a very precise methodology, a very valuable methodology and strategy. Okay, so it's very important to understand these particular fib rules. They're different than LED wave swing high, natural swing high, swing lows. Even though you think you're just fibbing a swing high, swing low, what you're actually doing is fibbing an LED wave. Not that you're maybe conscious of it, or not that you're planning to do so, but unwittingly you are actually doing that. Okay. Now I see people leaving the room, so apologies if this is maybe boring for you, but we will look at live action trading very soon. It's just that I clearly want to state the fib rules before we dive into actual things. Okay. So this has really nothing to do with LED waves. This is really a precise strategy how to trade fibs based on targets, basically. Now you do want to still have an idea what the trend is. So trend definition is still very important because you still want to trade it with the trend, because that's where you can still use the wrong fib if you start trading the fibs against the direction of the trend. Okay, but that's a whole different story. That's something we'll discuss another time. So when we hit the we didn't hit the minus 618 target here, so we still keep the same fib according to the rules. And we hit the 50 and then the 38.2, bounce off that. Here we hit the minus 618. So we take the top, move it to the new top. Where's the new top? Right here. That's the top that is above minus 618. So that's where we move it to. Where's the bottom? Here. Well, actually, it's here. That's the 50% bounce. So we move it to there. Sometimes, though, these swing high, swing lows will look unnatural. All right? And that's just nothing we can do about it. That's just a rule, and if you like that rule, if you like the strategy, then you have to just abide by the strategy rules. This is looking funky. That's because you're used to using fib swing high, swing lows according to natural tops and bottoms that adhere to wave principles, even if you don't use waves, right? So you can see price basically makes doesn't even make much of a retracement. It goes to the 23.6, goes to the minus 272 target, struggles, then retraces to the 38.2, and then moves up to the minus 618. You see that? Still hitting the target pretty precisely, even though it's a funky fib. So what you want to do then is take the new bottom. What is the new bottom? This is the lowest bottom. You always take the lowest point of the new fib, and this is the target being hit. So then we can move the fib from here to here. All right? And then we see basically the new fib. We see the 61.8 being hit, and price eventually going above the minus 618. All right? So then we can again fib the new one from there to there. And this one this one failed, right? So when that happens, you just take the fib off, and that's it. I mean, basically the upside here, when you fib it, is a loss. I mean, not a loss. You had previous winning trades, but I mean the upside using the fib from this bottom on the hourly chart ran its course, and we got a bigger retracement, right? So what you then want to do is maybe look at retracement fibs, right? We have a fib on the opposite side, like this, for instance. So you want to it could be very interesting to know when the downside fibs are not valid anymore, right? We see 786 fib to minus 272 target. So we can move the fib. Remember, 786 fib is the minus 272 target. So we can do this, all right? And what do we see? We see price going up to the 23.6, down to the minus 272, up to the 50, down to the minus 618. What did I just tell you about what could happen? This, remember? Shallow bounce, going to target, but then retracing deeper. That's exactly what happened here. Right? That formation. You got it right here. So then we hit the minus 618 finally, so we can move the fib again from the highest point in the downside to the target, which is here. And we're still in that fib. From this perspective, a resistance spot still could be 138.38. 138.38, yes. Okay, because that fib is still valid. We respected the 38.2, we respected the 61.8. Now, it doesn't necessarily mean that the 78.6 will follow through on the downside, right? No fib is ever perfect, and no fib will ever always reach the target. Plus, furthermore, we're in an uptrend. So this is more of a resistance spot than an entry spot, in my opinion, because the trend is up. But if you look at the retracement fibs, now this is a retracement fib that merits caution. Because we broke out of this downtrend channel, though, indicated by the orange, I would not see it as once again, I would not see it as entry. I would see it as a resistance potential. This 138.38 and the 138.55. John has a great comment. It's true. If you look at higher time frames, you can zoom in to lower time frames to get an entry point. Indeed. So, for instance, on the daily chart, let's see. I'll start one bottom further because it was quite messy before that. And that's, of course, something you must realize is that fibs are going to have troubles with the ranges. That's why I would personally recommend using them in conjunction with moving averages or whatever method you use to understand that there's a range going on. Now, if we start with this daily fib, for instance, all right, and we see that we had a 50% bounce here, we can start zooming in, right, in this piece here to catch smaller fibs. So what we could do is use this 50 fib as an opportunity, say, okay, I'm interested, or a trigger, like, you know, when it hits the 50 fib, I'm interested because then it's confirming a trend, and etc. And you can start actually using entry points indeed on the lower fibs. So, yes, that's totally true. If we would, you can use this methodology on all time frames. I mean, I don't know about 1 minute chart, but I mean normal time frames. And you can see here 50% bounce. We didn't hit the minus 618 target here. So officially we cannot move the fib. However, from a discretionary point of view, it's kind of like against the regulations here. If you do put a fib here, you'll probably see some bounce. It's close to the 78.6, right? I'm not saying that it's not impossible to do it, especially in this case. This was really a deep retracement and price going back all the way to 61.8. Probably not too likely. That could happen more maybe on the lower time frame, to be honest. But still, officially, we would have to, for this daily fib, we would need the minus 618 to be a hit, what happened here. Then the fib can be moved, all right, from bottom to top. So let's move that on this daily chart. Price bounced off the 50. and we're still in that fib. Price broke the top here a bit. So the next target is the minus 272 at 140.96 and the minus 618 at 143.60. So now that we are breaking out of orange trend line here, now that we're breaking out of this orange trend line, this one, not this one, let me make this a different color. Okay, this orange one. We have a potential breakout on the daily, basically. We have a breakout potential up to this top. We have to be aware that that's still resistance. But other than that, up to the minus 272, we could expect a bull flag and then continue up to the minus 618. Now, using fibs like this is going to definitely take some time, especially if you use it on multiple time frames. It's not so that you can do this, I would say, this analysis, within a couple of minutes. You're going to have to, you need to prepare it, and once you prepare it, maybe then of course it takes less time to update it, right? But it also could get quite a lot of mixture if you see a lot of fibs. So, maybe you want to limit it to 2-3 time frames or so. Otherwise, you could, or at least try to use the fib properties for time frames so that the chart doesn't get too clustered. All right. So if you have any questions, let me know. But this is basically what we can use for today. So the euro dollar looks like a breakout. Now, if we look at the hourly, let me get rid of this daily fib. We know what the targets are now on the daily. So with that said, let's take a look at this breakout here. We are breaking out. From a breakout perspective, this is a breakout opportunity. However, from an Elliott wave perspective, I would say I would be a bit more scared for maybe an ABC correction. However, if we do break above this particular resistance, then there's probably a good chance to continue with that breakout. Is there a lot of space? There's about 30 pips here above this top up to 138.39. Not much. There could be some intraday scalping trades to the upside. But for a swing trade perspective, not much space because your risk is all the way here. And even if the currency makes an upside, there's a high likelihood of finding resistance and making, I would say, an ABC correction eventually. And from a swing trade perspective, it would make sense to wait for price to complete this upside, fib from blue to blue, and wait for a 50 or 61.8 fib here at the blue circle, for instance, for that upside to the minus 272 target daily and minus 618 target daily. So that upside could be potentially interesting, but it's more for, let's say, intraday traders or scalpers. Okay, so if you put fibs on the hourly move here, you can even do that, right? You can take any bottom or top and start fibbing it. But you would like to preferably do that with the trend or a bigger correction. So what do we see here? Oh, sorry. We see a 38.2 bounce, and then we see the minus 618 being hit here. We see a shallow fib, 23.6, and a minus 618 being hit. And we just had a 38.2 bounce. All right. What is the first target of a 38.2 on this hourly? Is the minus 272 at 138.27. So with that in mind, you could look at the 50-minute now and say, okay, if you didn't take the 38.2 bounce, then one way of doing that is, for instance, waiting for the resistance to some smaller intermediate resistance to break like this. Wait for some candlestick pattern, maybe on the 30-minute chart, for instance. This bounce off the 38.2 could have been one way. Or diving into the 5-minute even and waiting for dips back to the moving average. Either taking the dips on the moving averages or the bounces off the moving averages. Let's take a look at where the Camarilla is. There's also a pivot point right at that 38.2, so not surprisingly, price did bounce off that. Let's see, we have an H3 short, 138.16. I don't know, that seems a bit early to me, but it has an H4 long breakout at 138.37. So that makes sense. It's like a resistance level. That's the main target, in my opinion. From this pivot point perspective, you can see that there's not much confluence between the fib targets and these pivot points because we have an H3 short, significantly making it more difficult to reach that 138.37. And R1 as well. So I don't know. That doesn't seem to be much of a match. The pivot point though was the bouncing spot. So it doesn't seem like much space, but if price does move up impulsively a bit like this and then hooks back to the moving averages, then there could be still a breakout, a bounce trade maybe up like this. Specifically, maybe if we hit the H3, then start to make some three-wave correction and then start to bounce, there could be some space there. Not much space. But this is how you can drill down to all the time frames as you use the fibs and use maybe some other tools to, as an addition, as an aid, how you can drill down and determine if the trade is interesting or not. Now, not necessarily every pair has to be interesting, so don't worry if it's not interesting and if you don't think it's worth it. There's nothing wrong with that. Let's see if the pound dollar is maybe more interesting. Pound dollar is in the uptrend channel. All right, so, and we broke out of the black trend line here, thereby actually breaking out as well. The pound dollar broke out a lot stronger though. Look at this daily candle pushing through the black trend line. A lot of power, a lot of momentum. Very big daily candle. Let's see. About 150 pips. That's a big bullish daily candle. No doubt about it. At least compared to the recent price action. So that daily low, yesterday's low, is not a level I would expect to be broken. So any stop loss there would be, relatively technically correct, I would say, and we can get a retracement of yesterday's candle to any level. We can put a fib on that daily candle, for instance, even. Now that's not necessarily the strategy that I'm explaining here, but you can use fibs in multiple ways. You can even use this. You could do that, right? There's nothing wrong with it because it's such a big candle. Something like that. All right. Could stop at any fib, to be honest. Here we had a 61.8 bounce. And if we put a fib on this natural swing high, swing low, we had again a 61.8 bounce. Right? And it went right to minus 272 target. All right. So basically, that's still the fib we're in. We're in, this daily fib and this 4-hour fib. And price is still moving to targets. It still hasn't gotten there. So on the 4-hour chart, right, this is actually, this fib, this newest fib, well, I'll make it a bit different color. This purple fib is actually not a 4-hour fib. All right, the 4-hour fib is still actually, the price is still moving to the target. Right, it could be an hourly fib. Right, if we move to the hourly fib, hourly chart, then we can see price is probably, let's see, roughly speaking, we're probably using that fib. actually, technically speaking, the hourly would be using this fib, all right? But from a discretionary point of view, we know that the chances of yesterday's low being broken is so small that it makes sense to move the fib up. Officially, though, from the hourly perspective, it would be this bottom. It's the technical correct one according to that strategy. The pound dollar, looking at this impulse, I am looking for a bounce off the 38.2. Could even be the 23.6 because it's such a strong impulse that the likelihood of a continuation at a shallow fib is relatively quite high. All right, and we see targets at 168 roughly, and I wouldn't be surprised to see continuations even up to when we break 168, which is basically also close to the daily top, I think. Yes. All right. So when we break that level, then I wouldn't be surprised to see continuation up to 169.70. And you see all kind of fib confluences. You see the top here, you see the minus 618 here, you see the minus 272, and when we break to higher grounds, we have a bigger minus 272 at 169.70. Now you can also, this is trending mode, using fibs with trending mode. You can also actually use fibs for retracements. And how is that? You could use the bounce off of a fib retracement, off a fib target, as a potential bouncing spot. Now, how do you do that? Let's take a look. For instance, on the hourly here, on this pound dollar. If you want to trade the bounce off of fib retracement, what you're looking for is, you're looking, of course, to put fibs on the retracement. So you do the same thing from swing high to swing low, but basically what I would recommend in this case, what I personally use more is the minus 618 targets. Looking for minus 618 targets, minus 1,000 off of a natural swing high, swing low. To me, this is a natural swing high, swing low, one move correction down to target, down to target. This case, the minus 1,000 was the target. Most cases, the minus 618 is the bouncing spot, and you could expect continuation of the trend at that target. That's one way of looking at it, of taking with the trend continuations. You can also take reversal trades on it, as I said. How do you do that? In that case, you want to actually look at bigger fibs. For instance, when price gets, one second. When price gets to a bigger daily minus 272 target, for instance, that's when you're primarily interested in using that, because otherwise the fibs could be too small. You don't want to use that particular reversal trade idea on a small fib. Okay, you want to use it more on a bigger fib. Like, for instance, the minus 272 of a daily chart, 169.70. If price gets there, there's a high chance of getting a bounce at this level for a retracement, at least down to the previous top, right? So there could be some downside trade, right? There could be an upside trade up to the minus 272 target, but then after the minus 272 target gets hit, that could be a downside to the broken top, which could then provide the support up to the minus 618 target. So you can trade up, down, up. The ups are with the trend. The down is the retracement trade. Now, you don't have to necessarily take the immediate bounce off the minus 272 target, because sometimes price pushes through it, right? But you can look on a lower time frame for hook back and start fibbing that and trading it to the downside. That's a riskier trade, much riskier, because of the fact that that's retracement. Okay, so maybe we can take a look at a practical example quickly. Now, just bear with me. I'm just trying to find some target here. Okay, this makes sense. Okay, let's take a look at this fib. Here, I don't want to go too back in the past. That's why I was trying to start from the bottom of this trend and work forward. So basically, we had a 61.8 bounce here. No, sorry, scratch that. This was still the swing high, swing low. This is the top. This is the bottom. Excuse me. And price then, what did it do? It went up a bit, went down back. Basically, using the 23.6 as the bouncing spot, went up to the -272 target, corrected, and then went up to the -618 and stopped there. That's where we stopped. Okay, so you can see both the -272 and the -618 providing bouncing spots. So what you can do is, if you expect the -618, right, to be resistant, which we should on average, doesn't have to be as precise as now. I mean, this is an ultra perfect example by coincidence, not that I pre-planned this, as you can see, but the price really stopped at both fibs precisely and gave some retracement there. So let's take a look at this -618. How could you trade this retracement? Some retracement here. So you can see technically, actually, the correct fib at the moment on the daily chart is from this bottom. I mean, according to this strategy, is not this swing high to swing low, but actually from here to here, and price bounced off to 38.2. In that regard, the first target would be the -272 at 170.74. Okay, so it depends what fib technique you use. Anyhow, let's take a look at how this bounce happened if you want to trade it the retracement way. Okay, so for instance, if price gets to -618, right, and you see 4 hour, you can trade it anyway. You can trade with candlestick patterns. You can wait on the even lower time frame to look for turnarounds, right? But if you see maybe a respect of that level with a 4 hour candle like that, all right, then you could take that potential trade. And if you want to be a bit secure, aim for the 38.2 fib of the most recent swing high, swing low, right? And you have this kind of reward potential and that risk potential. Risk. This is maybe not the best candlestick pattern, to be honest, out there on the hourly. Normally speaking, you have a bit more clearer picture of that it could be, you know, a turnaround. However, yeah, sometimes it's just not perfect. Otherwise, sometimes you still have a hook back quite recently that you can fib, right? That's what I was kind of hoping to see. In this case, you didn't see it. Sometimes what you basically see is that you get a down move, a hook back, and continue. Then you can, on a lower time frame, start fibbing this swing high, swing low, and not take the immediate bounce or candlestick pattern, but take the hook back here with the stop loss maybe just a few pips above, or 10 pips above, 15 pips above that, with the target of the 38.2 fib. We didn't get that here. I mean, if you put the fib on the very first move, price stopped at the 23.6, which is very shallow before it went down. So nothing we can do about that. What do you mean with, Richard, what do you mean with overlapping fibs? Do you mean like if I would use both the fibs with using the various methods I mentioned here? Is that what you mean? In my opinion, by the way, as an extra, I think using confirmation with fibs is important because it just gives an extra level of preciseness. You know, waiting for candlestick patterns or waiting for some break of, for instance, if you get a 61.8 bounce here, you might not want to take the bounce itself, but you see a big wick like this, that might be the one that you want to take. It depends how comfortable you feel with taking entries at the fibs, how much you've practiced that. If you see, once again, if you see a bullish candle like that, that could be interesting at the 61.8. Or If you, for instance, see this candlestick pattern and you see the next 1 hour fractal break, that could be the one you like, right? Basically what happened is that you had a bounce off of the 61.8, you had a pullback, and then you're continuing above the resistance, right? If this would not be the bouncing spot, what you would then see is a retracement, a move down, a move up, and continue down. That didn't happen. No, we had up, down, and up, down, up, right? So that's how you can avoid or have more confirmation, right? Instead of taking the 61.8 fib directly. Okay, Richard. Yeah, maybe the best is a screenshot. Not sure if I know what you mean there. So you can see this is how you can also, of course, tackle the entries differently than using the fibs themselves for entries. In that case, the fibs are triggers. Now, which fibs will we use, right, are usually speaking, the shallower the fib, the stronger the trend, one says. The deeper the fib, the weaker, but it basically, in my opinion, has to do with Elliott wave and wave analysis. A wave 2 is normally deep, a wave 4 is normally shallow. A correction is normally deep or even breaks the top or bottom. Now, if you don't like wave analysis, that's okay. Just keep in mind that if the trend just started, that they're mostly deep, and if the trend is more of an established trend, they tend to be shallower. That's an easy rule to remember. Alrighty. I see someone in the public is raising their hand. If you have any questions, by all means, let me know. Okay, and I'll take a look at your question. So that's the fib strategy, and yeah, it's a good strategy. It's an interesting strategy. It's something that, however, people use as a standalone thing. Personally, I recommend it to use it with the definition of a trend. I think it makes it better. I think it makes it more compact, more robust. Without the trend definition, I think you kind of get lost in the fibs, because you can be fibbing all swing highs. You can start fibbing from any bottom or top, in fact, which could make it quite time-consuming, quite confusing at times which direction you want to trade it actually. So that would be my recommendation, my optimization personally. However, there are traders that don't look at the trend and just start fibbing any top or bottoms on all time, let's say on all time frames or certain select time frames, and use primarily candlesticks and chart patterns with that. Let's see, the AUDUSD. On this hourly chart, you want to go back to a bottom that you know where price is starting with a new fib. We can see that this particular retracement probably took out the previous fib, but we're not 100% sure. I mean, in fact, to be honest, we could probably go back all the way here as the first starting spot for our fib, because this retracement prior to that was so big that it must have taken out any fib prior to that. Yeah. So let's take this as the first one on this hourly chart. We can see price went to the 50 fib, up to target, bounced off the 50 fib again, and went to the minus 618 target. So let's move from target to fib target. That's here on this AUDUSD. This is a bit funky looking fib. For anyone who uses fib regularly, it's difficult to see it because this is just no fib at all. It didn't even go there. Did go to target though, so we can move again. This is a breakout scenario, right? Sometimes price doesn't go to any fib. We're using a strategy and we just continue and continue. Those are breakout scenarios. Uh, da, da, da. Now I forgot which one it was. 1 second. Yeah, okay, good. I have the correct one. Let's move over and start adjusting this fib to the new top, which is here. And the new bottom is actually here. That will be the new fib on this hourly on the AUDUSD. And we see price going to the 61.8 and then hitting the minus 618 target here recently. All right, so that was 61.8 to minus 61.8. All right, so the new fib is actually from fib top bottom, from this bottom to top. This is the new fib. Technically speaking, this is the new 1 hour fib. Now, will it go to these fibs? We don't know. It could break out just like it did with this example. That's something we have to remain to be seen. Okay, and et cetera, et cetera. We can do this particular analysis on all time frames. It would, to be honest, be within the time frame we have. We can only really look at a couple of currencies. I mean, the way we normally look at currencies is faster. We look at maybe 15 of them. You know, it couldn't be done by looking at fibs in this way on all time frames, because on at least a lot of time frames or a majority of time frames, because it would be too intensive. Let's see. Manuel is good morning. Has a question here. Could you please quickly explain about the strategy fib levels between 23 and 68? How you expect price to move from one to another, and why is target minus 272 level? Well, if I could explain about the strategy, let's see. I'm not sure what you mean with the first question. If I can explain between 23.6 and 61.8, how you expect price to move? Well, basically what I would expect is if you're in an uptrend and price, this is the new fib, right? Then I would expect in an uptrend price to move correctively to these fibs in a bull flag triangle pattern, contracting triangle pattern, in a zigzag correction, and then bounce off of one of these fibs. Depending on the structure of the market, it could be a shallow fib, which is considered to be 23.6 or 38.2, or a more medium fib like 50 or 61.8. And the deeper ones are 78.6 or 886. Okay, that's how you can qualify them: deep, medium, shallow. The basis of the strategy. Okay, that's no problem. So basically what you're waiting for, or what you want to do, is take, on a particular time frame you're looking at, the bottom of that chart. The bottom of the chart is basically where you know that there's no previous fib that's in play into that direction. We know that this is the bottom because previously to that, we had a very big down move. It would have taken out any of these upside fibs that are available here, would have taken those out and would have broken the swing high, swing low. Remember that anytime the swing high or swing low is broken, that fib is invalidated and you can take it off. All right. So then, for instance, let's take a look at this upside here. When you move this upside, eventually, let's just for the fun of it, I don't want to do it all that work, but just for the fun of it, let's say this is the swing high, swing low. Okay. You see that swing high, swing low break, which means that upside fib is immediately not of interest. That means that when we look at this point, this swing high, swing low, we can take this as the bottom. So you can take any valid bottom or top and start fibbing it from bottom to the next top. The next top is the fractal here. What you're looking for is a fib bounce, and one of the fibs up to the minus 618 target for the following fibs: 23.6, 38.2, 50, 61.8. And for the 78.6 and the 886, the deeper ones, you're looking for the minus 272 target to be hit. Once that target has been hit, then you can move the fib from bounce to target. That is then the next valid fib. Not earlier than that. All right, so then we see 78.6 up to minus 618. We can move it again like this. $618 is hit, but we want to have the top here, which means we take it from bottom to top, and etc., etc. Then we just hit the minus 272 target. So on this New Zealand dollar. So the next major, the next time we can move the fib is when we hit at least the minus 618. For now, this is the fib. We had 23.6, quite a shallow bounce, roughly 38.2. We can't move the fib just in case it goes deeper. The 50 fib would be the next buying spot on this fib. But the strategy, if you're trading the strategy, you must also be able to trade breakouts, because with shallow fibs like this, as a 23.6, if you don't get a deeper fib, you need to trade the breakout. That would be the method. Now, how you trade it, right? As I said, there are different ways of entries. You can actually take the fibs, but if it's a shallow fib, it's difficult. So then you want to take the breakout. If it's a deep fib, you can even take the entry at the fib. However, if you don't get the confirmation, you're at risk that price could go through your boundaries, your swing high, swing low. If you get confirmation, that risk is less. All right, so I hope that's clear. If you have any follow-up questions, let me know. Good morning, Darshan. Good to see you. What do we expect with the pound dollar? Let's see. I'm not expecting much of a retracement. I would say 23.6 could be very well a bouncing spot. Not more than 38.2, I would say. Let's take a look. That's basically I'm putting a fib on this daily candle, basically. Yeah. This daily candle, basically. And, yep. So normally speaking, with such a bullish candle, there is some percentages, I guess, that it could go deeper, but especially if it happens quickly. If it really takes a long time, then something like this could happen, right? This was also a big move up. You expect to bounce off the 38.2, but then it just takes too long, and then it still makes a bigger retracement. That always can happen, because if it then hits and then moves up, it doesn't go as far, then still makes another resistance, like that, it goes up, doesn't go as far, and then before you know it, you could go to the 50, but then a lot of time has elapsed. Yeah, that's a good question. Well, does it have to go to the 23.6? Not necessarily. I guess it's does not a must, never ever a must, I guess, but I would say that there's a decent chance it could go there. 22.6 is already quite shallow. Maybe we can even fib this just in case from this bottom, not the daily candle maybe, but really the hourly bottom here. 167.20 and 167. I don't know, this breakout trade here, if it doesn't get to the 23.6, yeah, it's possible. If it's a very strong breakout, it's possible. Because sometimes you do see big daily candles that just get immediate follow-through. Look at this big daily candle, right? Didn't get any retrace, so it doesn't have to go to the 23.6 at all. That's true. It could, but doesn't have to, especially if it's a very strong impulse, which this seems to be. It shouldn't go to it shouldn't linger too long here. If it takes 3 days to get the follow through, then it's differently than I expected. If this is a really impulse bullish breakout, there should be some follow through today or tomorrow at least, I would say. But we do have FOMC today, so maybe that could be a catalyst. If we measure today's wick, today's daily candle opened at 167.46. The low at the moment is 167.32 roughly. So this is a 14 pip wick here. 14 pip wick. Which is something I guess I never really did a study on that, to be honest, but just from my own observations of what I remember, that usually speaking, if you have a strong bullish candle, you either see follow through or a small wick like that. Let's take a look. This is a big candle and a very small wick. What is that wick? 16 pips. Wick here, 5. Here, of course, is a big retracement, so I'm not going to look at that. I'm just looking for immediate follow-throughs. $10 pips. $9 pips. $6 pips. $26. Well, yeah, you get the point. I don't have to go through all of them, but here you got some good ones. No wick at the bottom. 11 pip wick at the bottom. 17 pip wick at the bottom. 25. Yeah, there's also news indeed. Some news on the pound, so this could be this could be today's wick already. It is possible. Let's see. Euro dollars holding up. Yeah. Looking pretty corrective indeed. It stopped at yesterday's resistance here. But looking like more like a bull flag. Seems like a decent probability of engulfing twins and further upside. Looks like a dollar weakness in general, and looks like both the euro and pound have good breakout potentials here. Relatively, of course, relatively already pretty big correction here if you look at, relatively decent correction at least. Looking at this wick compared to the daily candle, if we fib the daily candle of the euro dollar, price went to the 38.2. So that could be maybe a reason why it's holding up stronger than the pound, or I don't know, it seems like pretty even to me, I guess. Any other questions maybe regarding fibs or any particular currency? Because there are a lot of currencies, in fact, that we haven't looked at. Sorry if that was boring regarding the daily wicks, but just doing a study on that, as you can see, you can easily do a study. You could, for instance, say, okay, a big bullish daily candle has to be at least 100 pips. If a daily candle is 100 pips, how much wick does the candle have the day after. Could be interesting. These statistics are, potentially interesting for trading purposes. Euro yen. Euro yen is not interesting in my opinion. Sorry about that. Didn't want to disappoint you there, but I don't like it. It's not trending. What I think most trending is AUDUSD, New Zealand AUDUSD. So sorry for asking that in that case, but Euro New Zealand, for instance, those are more trending. I always try to find the most trending pairs. Those I think are the most trending at the moment. Problem with Euro Yen is just the yen part of it, most of all, because it's just pretty wacky at this point in time, pretty choppy. Definitely still relatively an uptrend, but price making kind of like this double top slash not breaking this resistance. Now potentially at this bottom here as well. So in this kind of triangle, and therefore not so interesting in my opinion. I had a very strong downside, but I wouldn't consider this a trend. This is a momentum burst to downside. If you caught the top here and the bounce off that trend line, great job. If you didn't, then it's difficult to trade in the sense that it's just like a range environment. So I just like trending more. I mean, I don't like trading ranges specifically halfway. So my main analysis basically would be that simple. Wait for the break of one of these two. Let's see. Now we could, of course, put pivot points on it and see what intraday could happen. We might see a bounce again off this level. For instance, if you hook back here, you could get a bounce like this. That could be maybe interesting. Is that something you're looking for, Thomas? This hook back for up to this upside? So let's see. That's what you're thinking of. Okay. Yeah, there are a couple of ways of trading that. You could put a fib on this upside and take an entry order, put an entry order at the fibs, wait for a bounce at these fibs, like a candlestick pattern, or even wait for a break of this top with the same stop loss, though, below the low here. The yen, the dollar yen, is also at some kind of bouncing spot because it too is at the potential support here. It too could see a bounce there, although it was a very strong downside. There's potential for the currency to be able to retrace, or at least bounce a bit. Let me say it this way: the euro dollar is trying to break out to the upside, at least, so that does support potential euro yen bounce there. What I like at the moment, definitely the New Zealand USD, AUDUSD, this Euro AUD pairs, Pound New Zealand pairs, Euro New Zealand, they're trending very nicely. There seems to be pretty good space as well. I mean, if you look at the daily here, we're trying to punch through the intermediate band. Now, this is the first approach of breaking this intermediate band. So at one point in time, there could be a snapback, a bit of retracement before we make the next fall down to the long-term band and this support level. All right, so that's something we have to be aware of. So not to say it could happen right here, right now. I mean, you could still break this bottom, fall a bit, and then make the snap. but that's something we could be aware of. It doesn't even have to happen. It could just keep falling more than we think, and it could be more momentum. So never would want to try to trade that snap up. Just want to position yourself so that you're trying to like trail stop it as much as you can on hourly, maybe your 4-hour, whatever you use, or 15-minute chart, so that you don't get caught too much with empty pockets. All right, but there is that space to fall, right? But also here, when we broke below it, we first hooked back up, right? Now that could happen here too. It doesn't have to though, but we have potentially this space here, which is a very nice space. So that's very interesting, 1,000 pips or more. Looking at the 4-hour chart, though, we do have divergence between these bottoms here. So looking at it from that perspective, the next bottom break, I would be expecting more of a retracement. Not that I would trade a retracement, but I want to be careful of my shorts if you're on any shorts in these currency pairs, because of the fact that if you do break, you are bumping into some potential double divergence maybe on the hourly, for instance. So this kind of level could be a bouncing spot, maybe up to even a resistance like the long-term moving average on the hourly. When using the fibs, let's take a look at the pound odd example, and then I guess if you don't have any questions, we'll wrap it up for today. If you put a fib on the very first correction down move here, went to 23.6, then hit the target here. So let's move it from fib bounce to target. Fib bounce to target. And fib bounce to target right there. Now that particular swing high, swing low got broken. So this one has to be taken off. And we then know that this is the new top for the downside on the 4-hour chart. We're looking for targets, right? So we know where the currency could stop. This one was just missed. It's a very small difference. In some cases, to be honest, if it's a very small difference, I do make an adjustment for that. Technically speaking, it did miss, so let's keep it very strict here. Those are the rules, actually, so let's stick to those. And you see price stopped at a minus 272. After a very shallow fib bounce, there was no fib bounce, in fact. So the next one would be the minus 680. Well, that adds up a bit where I was expecting. We're getting close to some bouncing spot. The 177.10 maybe would be that before we get a bounce. And how far could it bounce? Then we need to take the new swing high, swing low, which would be this, funny enough. That is a bit funny fib, but that would be the 4-hour fib according to the strategy, the new one. So what you can expect is maybe a fall here, and then a 3-wave bounce probably up to any of these resistances for more downside probably. Something like that. If the fib boundary holds here though. This particular swing high, swing low. Okay? So this is how you can use fibs for your analysis, maybe even for entries. But personally, once again, using this strategy as is, I would add, if I were you, a trend. That's what I do. Moving averages to know what the trend is, and confirmation of bounces at fibs, like candlesticks or price action or breaks of fractals on lower time frames. In back into the direction of what you want to trade. All right. So did you find, just out of curiosity, did you find this particular method interesting, or do you like more the natural swing highs, swing lows? There's no right or wrong. It just depends on your personal preference. You know, everyone has their own way of viewing things, so it's just a grayish opinion. It's a matter of opinion, not of right or wrong. So if you say, you know, you like one or more than the other, or you don't like both, you know, if some people are not big fans of fibs in any case. So. Cool. I got 2 people who found it interesting. That's great. Well, it's always nice to have at least, of course, some people interested in it. That's great. The only thing I do differently is if I look for fib retracements, then I use more natural swing highs, swing lows. For with the trend movements, it's okay. For reversals, I rather use natural swing highs, swing lows to know where the -618 target is. As an extra point. I think I already mentioned it, but just to emphasize that. And yeah, you can do this basically on all time frames. So, you know, you want to be careful not to exhaust yourself too much in all of it, because it could be quite overwhelming if you really. Well, I guess once you've done the work on the monthly, that wouldn't have to change too often, does it? Because you don't hit a monthly -618 all too often. I mean, you don't hit it regularly, so that could stay on the chart for a while. But you get what I mean. So it's up to you how intensively you want to use it. On one currency, or if you want to use it only loosely on the trending pairs that you follow, for instance, at that time. That depends on your own view of things. I look at a lot of pairs, so for me to do this intensively on all of them would require too much, because I look at very many pairs. But maybe you look at less pairs, maybe you look at 5 pairs, then you can do this more intensively on 5 than you can do on 25. Unless you really have a lot of time, well, even then, not sure if you would want to do that, but you get my point, I think. So, well, folks, we'll be, I guess we'll be back tomorrow. I don't see any questions. If you do, let me know still. Otherwise, in the meantime, I'll just show you quickly this webinar we have tomorrow, Scaling in, Scaling Out. Tonight we have Renko Range Bars Part 2 with Talantala. And tomorrow, as I said, live trading room, Scaling in, Scaling Out, and understanding the market structure in the evening. And if you want to know more about fibs, by the way, I also use fibs on the daily wave analysis. The main focus is waves, but in conjunction with waves, I always use trend lines, short point of resistances, moving averages, and fibs, for that matter, to decipher at what spots I like particular, or let me say this way, I expect particular movements, right? Because what I don't like much about usual wave counts is that they only have wave counts. I don't think it's very practical. I think it's theoretical, it's dry just to see wave counts. What can you do with it really, is my opinion. So what I try to do with the wave counts I put on here is not only the wave counts, but also have a practical angle to it, a practical approach in the sense that by adding trend lines, moving averages, and fibs, you kind of like have more than waves. Waves is like complementary to the other analysis, so that you kind of get an idea what the vibe is just beyond the waves, right? What things is the market support or resistance trends telling us? I think it makes it more practical. It's a more practical approach than just using waves as is. I don't think that provides the same value for trading purposes as combining waves with actual useful tools, basically. So fibs is one of those. So just wanted to add that. So otherwise, I don't see questions. So, well, thanks for spending your time with me, and I hope to see you soon. Cheers, everyone.